Welcome to the Beautiful in Its Time podcast. We're Brittany Thompson and
Chelsea Lyles.
And this is the space where we talk about financial literacy, career growth, and making clear life decisions.
Our goal is to help you think with a sound mind when it comes to money, major purchases, and leveling up your career so you can move through life with more independence and confidence. Because when you understand the right time and right place to make your next move, everything changes. Let's get into today's conversation.
Let's do it. So, it is tax season. We know the cutoff date is April 15th.
That's what the people say.
That's what the people that's what the people say.
That's what the people say.
Okay.
Mm-hmm.
So, I think I want to start off this conversation, Chelsea, with how do you feel about tax season? Like, are you one of those people who go, I'm excited to file my taxes because I know I'm getting that big refund? Are you one of those people like, I don't want to file my taxes, I'm going to wait till the last minute because I know I owe?
See, the honest answer there is no. First of all, I'm going to keep it real. Can we keep it real?
Okay,
I'm going to keep it real. The people ain't got my tax returns for 2024 and 2025. Look, we just found both yesterday, okay? And look, the people that told me I had to mail in 2024. So I'm one of those latter people. I am not trying to get in people my information. I'm not trying to have them in my business. It's a no. So yeah. How about you?
I'm one of those people who want to file my taxes right away because I was one of those people who had a W-2 all my life and I just paid the taxes. I didn't really look into it. And so I always got that big refund and I would either pay off credit card debt or like go on vacation with it. Now I was self-employed for 4 years and I was a little scared because I was like, I don't know what I'm gonna owe being self-employed because myself is responsible for all the taxes, not just my employer.
Listen here, come on for the people. You know what? Honestly, we're gonna dive into this today because you can be on Brit's side of the aisle, my side of the aisle, but you can also be a happy medium, and there can be some folks who are way beyond our side. So honestly, sometimes what feels like a setback is actually financial growth, and that's what I had to tell myself because I've had many tax professionals tell me, "Oh, you're gonna owe a lot of money," or this and that, and it's like, I don't want to hear that. So, but the on the flip side though, Britt, who wants to be in trouble with the IRS?
No one. Okay. I would hope not. Anyway.
All right. So I'm going to go ahead and get my life together. Anyway, let's dive in. Let's dive in. Listen. So diving in, tax season does pull out a strong emotion. And I'm going to say every American, rather it be what? You getting this funds to pay them bills, set yourself up for the rest of the year, get yourself maybe out of the hole, or maybe like me, you just like, okay, let's see what we owe, but it just depends. It depends. Why do you think people look forward to refunds?
Well, it's like what I said earlier. They have, they know they're going to get a lump sum of money that they normally don't see throughout the year, right? I know some facts about savings accounts where a lot of Americans, a majority of Americans, have less than $500 in their savings account.
This is true.
So when tax season comes, they're going to have more than $500. A lot of times people get anywhere between $1,000 or more. Yeah. And so they see that big credit card bill is the first time that they can actually pay it off in one lump sum instead of the minimum payment.
Exactly. And that actually, I guess we wrote that down, right? Like we're categorizing those folks as I'm counting on this mentality, right?
Yeah.
And what could that be caused by? Also, like I love a dig deeper conversation, right? So if you are a childhood or a person who came from a childhood who had parents maybe who only allowed the tax refund to be the best mood that they'll be in all year, or maybe that was the time that you maybe got the new pairs of shoes and new toys and things. Do you think that has something to do with maybe why some people look forward to refunds just because they were psychologically adopted to it?
I agree. Yeah, because financial wellness is all about where it started from, and a lot of people either taught it or they have to teach themselves it later on in life throughout all the mistakes that they made. So I agree with you. I think it is a childhood influence. I don't think I heard my family like that I grew up in talk about taxes. I just knew they needed to be filed.
That's it, right? Same, actually. My parents always kind of diddle daddle around, and I knew their tax accountant. And he would legit come get their packet of stuff, and we never really heard anything about it. But for us, nothing really changed. It wasn't something like we look forward to, like once my mom and daddy get their tax money, blah blah blah. Like it was nothing like that in our household. But I do see, because we work at a credit union, for context. We work at a credit union. We've been in finance. We've seen it all. And right now, we have just been seeing people are going pretty much bananas about, well, these tax refunds. I'm gonna just call it a spade. But that leads me into my next thing. Do you feel like the tax refund can be you wanting money now, or you're trying to build stability?
I think most of the time when people are depending on that tax refund for a large vacation for their family or to pay off debt, I feel like they're one of those people who it's instant gratification.
Yeah.
Because if they were planning all this time, a tax refund is just extra to them. It's
That's
not
right.
their savings plan.
Right. And I also think, to that point, the materialistic reward that social media allows all of us to be a front row audience now to anybody getting a new house, a new car. And I kind of call it, y'all call it hood rich, right?
Right.
A faux rich, if you will. Listen here. I mean, the thing is, I don't want to feel like I'm faux rich, and I've never been the person to put on and all that. Like, I'm very private. You know this. I'm very private. And when it comes down to materialistic things, although I like the finer things in life, I am not the flashy type.
I would say, so there's a song by a rapper that I love, and it says, "I ain't gotta flex." So tax time is flex season, right? It's the time where you can throw money in the air and feel like you got it.
Listen, I went to Longhorn Thursday night. I ain't never seen that many people in the Longhorn. I said, I'm trying to slide through, honey, get my little chicken palm, baby. I don't understand where y'all come from. But you can tell too, y'all. If you are not a person that's used to being in that environment, you stick out like a sore thumb, right or wrong. Now,
I mean, you don't even have to. Okay, let's just face it. We're women too, right? So, like, we love to go get our nails done. We love to go get our feet done.
Yes,
and
pampered.
So, at this point, you don't have to pull out that credit card to swipe. Now, it's just like, I got the cash for this. Or I pull out the credit card, get the points, and pay it off with my tax money. But I know I can afford this luxury right here.
Listen, but honestly speaking, though, it's one of those subject matters that gets touchy at the end of the day. You either got folks who are really depending on something to come through and break through, for them to break out of a cycle, but then it's also could be maybe a financial trap for some folks because they don't know how to manage it well. Just speaking about how we were talking about
I want to say this too, though, if you don't mind.
Yeah,
it reminds me of the line you said, I ain't gotta flex, and he's just flexing and pulling that money out, and then he says, your culture, your family, your society thinks that you're rich.
That's right.
And then he says, in the line, he says, now Uncle Sam came, and now you need gas money.
Oh, my.
So aren't you one of those, that leads us into the next time, where, like, you've spent all this money, whether it's paying off credit card debt, whether it's going to a restaurant that you normally can't afford during the year, and then all of a sudden, we're in May, June, and now you need gas money. You need bill money. You can't make your payments on time.
The tow man at the door.
Yes.
Hooking you up.
Yep.
And you're running after them. See, this is the thing we don't want to talk about. And that is honestly the downfalls that people don't want to talk about. People do not want to talk about the realistic things attached with these tax refunds, because many people don't even look at tax refunds as legitimately money. Some people legit look at these tax refunds as free money, and they don't treat it as though it's a asset.
Yes.
They don't.
That's a good point.
And it causes them to do the poor financial planning throughout the year. That's my thing. Throughout the year, if you are working, Britt, and you got your taxes coming out your check, and I don't like the tax coming out my check, I'm gonna just call it a spade. I don't like that. I don't like it. So if my goal is to break even, because I don't want a heap of money, and I also don't want to owe them folk a lot of money. Truth be told, okay? We're talking about, breaking even is my goal. And honestly speaking, it should be
I think that's a great goal.
I think that's a goal to have, honestly, because when you think about it, if you are giving these folks all this money throughout the year, and even if you're not giving them all this money, you're just one of those people who don't work past a certain tax threshold, and you maybe have dependents and such, and you get some funds back, this really doesn't apply to you. But at the same time, it could, because if you're not working enough to supply throughout the year, okay, and then we wait till the beginning of the year to get you know I'm going.
Yes.
Y'all, and we worked a bunch of diverse careers. I remember last year I sold a car to a woman when I was working at CarMax. I sold a car to a woman who legitimately is a waitress. She tells me she only makes X amount of dollars because she, you know, she's just at a place in her life she cannot afford to be at work all hours of the day because she has children, this and that. She has like 6 children. Okay. Lady tax refund like $15,000. Okay. Hear me. 15. And she came in, she wanted to buy a Telluride. Now, y'all, if for future reference, keep on listening, because Chelsea gonna get into that. Brittany gonna get into that. But she wanted a Telluride. I do not recommend. Why you have 6 children. A Telluride seats 6. Bam. They're going to be all squished in a teenager. Anyway, sidebar conversation. But anyhow, the lady wanted to put the entire tax refund down on a vehicle. And the thing that hurt my heart was the interest rate. She could care less. She just wanted the vehicle. That's what hurt my heart. And I did not understand, I'm trying to explain to her, listen, ma'am, if you put $15,000 with this interest rate, you're going to find yourself in an upside down situation, even though you put all this money down. And then you still don't have what you need to provide for your household, because I'm not trying to tell out of business, but, assistance of the government had a lot to do with how she was floating.
Well, what are we talking about here? We're talking about instant gratification, the place and the time. Yeah. So instant gratification means I got this lump sum of money. I'm going to go put as much as I can down on a vehicle. Maybe my credit score is average or not a credit rating, so I know I'm going to have a higher interest rate, and so I'm wanting a minimum payment monthly, and so that's what I'm doing. I'm putting all this money down so that all throughout the year I have this minimum car payment, not planning throughout the year on whether or not I'm going to have an emergency, and this would be great. Bingo. And put into the savings account. Bingo. And so there's a time and a place to put a lot of money down on a car. But you got to really financially plan throughout the year before you even make that kind of decision.
Right. And can I raise the subject of even predatory tax services?
Okay. Yeah.
And I'm going to say this because before I was doing my own taxes, I had a CPA who was my uncle. He got fired. Low key. If he hit it, sorry. But anyway, he got fired from us. But the second part of that is when me and my husband decided to go to one of those places that do your taxes and such. We went, and this lady tells us what the bill is going to be to do those taxes. I looked at her like she had 3 heads. Because what do you mean you want $895 just to file an e-file? Okay, 800. We wasn't talking about no complex situation at all. We're talking about straight W-2s, straight dependents. That's it. We wasn't even putting the church ties on the tax return.
But wouldn't you say, Chelsea, that it comes with education? Because when I first started filing my taxes, I was going to the I don't want to name them, but you know those tax services, right?
But listen, and they got tax advance on the door, and that's what brings me to this subject. I'm gonna let you finish your point. Finish your thought.
I was just saying, and I don't want to name any names. Don't want to get in trouble here, but you know those ones that are advertising, yes. And I thought, okay, as long as they file my taxes, I won't be in trouble for not knowing how to file my taxes. And so I'm okay with paying that fee because they're doing it for me.
That's right. But that's crazy, right? We can agree there.
I can agree.
And to your point, the people don't even understand. They will get in trouble for that. I'm going to tell you something. When people go into those places expecting, oodles of money back, they do sign up for those tax refunds. Let's keep it a bean. They said they need this money today. This money needs to be in my pocket today.
That's true.
But the downside to that, you remember back in 2020 when we got those stimmies?
Yeah.
The stimulus aspect.
Yes, the stimulus.
Child, when I at the time, y'all, I worked at and I would also say allegedly, a big bank. And it's St. Patrick's Day, and it was also green. Y'all do the guessing. There you go. But anyway, the amount of calls I received from people talking about, where's my stimulus? Do you want to know what the stimulus was, Brittany?
Where were they?
Okay, back at them tax refund places that they got the advance from. You know why? Because when you sign up for them advances, your stuff goes straight to them, not to you. Wow. So you don't even really know.
So getting a loan, basically, is what you're doing.
You don't even know. So those people had to go and amend their stuff, had to go back and, dial back, if you will, connect with, they're big. I'm pretty sure they would like a little shout out, but they rhyme with letter, chalk.
I think I get it.
But anyway, I said, so yeah, if you go back to them, then they should be able to reroute the stimulus to you. Right. Imagine have to do all of that rather than just accepting a check in the mail or getting a direct deposit, all because you are so much in the era or the need for that money right now,
getting fast.
Yes,
and you instead of waiting for it to come into your account or into
Thank you.
Okay.
I remember that like it was yesterday. We had legit 700 calls in the queue. Never seen it that high. Ever. And when soon as I think it dropped on the 15th, something like that. I should remember, honey, the way I was in World War III.
Well, can we talk about perspective though when it comes to like that stimulus money too?
Right.
Like, so for me, my mindset, and we were talking about planning, right? Mm-hmm. All throughout the year.
Yes.
So I had my savings. I had like set myself up to be paid so that I could save throughout the year. So by the time tax time came around, and during that time period where the stimulus came, stimulus was just like extra money to my spouse and I. We were just like, wow, this is...
all, we was at the house.
Yeah, right. Like we weren't even using gas money. Like I was working from home. Me too. And so, no, right? And so, like, with that being said, with my financial literacy background, I also was a little mad at the stimulus money. I mean, I was great. Like, it was a lot at one time, but then I was like, what is going to happen later on?
Yes, I can agree. Because it was like, well, what's to come? And then y'all was out there stockpiling. That's what came. With no tissue on the rack.
No tissue?
No tissue, honey.
That's why we inflation right now. That's why we at $4 for gas. Almost. Because that stimulus money, they pumped the whole economy of money, and now they got to get that money back.
They got to get it back, baby. I told the people on the Facebook, and if y'all not following us on Facebook, I'm Chelsea Lyles.
I'm Brittany Thompson.
And we are on Facebook. We own all the socials. But, honey, if you want a little kiki, come on over there. Yes. So I told the people on the book. I told them. I said, the IRS ain't slick. They handed out tax grants. Grants, hear me now. So they can get it back in gas.
And it feels like it too. That is very
true. Because I said, I put 50 in Big Mama. Big Mama is what we sitting in, y'all.
Yes.
Big Mama is what we in. This is my minivan. $50? 50, and she didn't even burp, please. I said, we can have enough. We can have enough. But to wrap it, look, we're going to reframe the people's mind.
Okay.
We're going to have a realistic conversation.
Yes.
Because let's just say somebody does receive a refund, right? Spends it immediately as a down payment on a luxury vehicle.
Mm-hmm.
Wow, their rent has consistently been late. How are we reframing that mindset? Is that all right?
No, of course not. It's not all right. To buy a luxury vehicle, I mean, what are you going to do for the rest of the year? Live in a car?
Oh. No shade.
You're gonna have what is called a on your credit report, you're going to have an eviction on your credit report, and that's not going to show up on your regular report. Most of them don't. They normally show up on like a report that's like for renting or for mortgages. Yeah, your LexisNexis. And so you're not going to see that, and you're going to have to fight that. And we're not going to even get into that. It's another episode.
Episode, y'all. Keep watching. I mean,
yes.
Keep listening. Mm-hmm.
Yes, but the whole thing is that once you have an eviction at one apartment complex, one place.
Yeah, because I mean, keep it real. That's what it's going to lead to. Yes. All these late payments, you're robbing Peter to pay Paul. You're already behind. You get something as lucrative as a tax refund. That is huge.
Yes.
Most people are averaging what? At least $2,000 back.
At least.
If you have dependents.
Yes.
Typically. Right?
Typically.
I mean, that's not what I'm averaging, but it's all right.
Me either.
But
it's okay.
It's all right. But we here for the people. Yes. Anyhow. But that's where it's going to lead. Eviction.
And then now you're going to be upset. You're going to have to talk to one complex or one owner over and over and keep shopping around, because now you don't have the freedom to walk to any complex, to any place that will rent to you because of this mark on, and when you could have taken care of it when you got that large lump sum of money at the end of the year.
Exactly. And my I guess my problem with this scenario is, unfortunately, in we see these problems, y'all. These are real problems.
Yes.
These are real things that we see. And unfortunately, they come then to us last minute and requesting loans and such. And
refinances.
And the problem is, most times, if you are buying a luxury vehicle, number one thing is killing it is that depreciation.
Yes.
You are going to find yourself upside down at some point if you do not put a substantial, and I do mean substantial, down payment with a great interest rate. Because a lot of times we see folks in vehicles 10, 12 years old calling themselves luxury. And you just had this situation. But
what you're not aware of, too, is there's going into a bank and applying for a loan. You see the person you're applying the loan with, the person that's helping you put in the application. But then there are people that are called underwriters who are looking at the loan going, is that a risk? And what they're seeing is, like, if you have a certain credit score that's not average and it's below average, and then they see that you're buying luxury vehicles, they're going, well, does this person know how to really manage their finances well? Do we really want to lend to them? Because they don't make good decisions.
Right.
I mean, because the average person who would be rebuilding their credit or wanting better credit.
Or better for themselves,
or better for their better for themselves, because that's a whole nother story too. But if they wanted that, why are they buying a luxury vehicle when they have all of this that needs to be taken care of first?
Yes. And let's keep it real. There's other options.
And
I've drove luxury cars, still have luxury cars. The thing is, you have to account for the cost. We're not just talking about the payment. No. We are talking about straight up maintenance.
Yes.
I was telling you the other day, I said, baby, them cars don't have a straight up oil change. It's called a schedule. not your car on a schedule.
Not your car on a schedule.
It's a schedule, honey.
Planning to be in a luxury vehicle.
You want this for the oil? It's not the oil change. It's Schedule A. Okay, please. Spare me. It's like, for real. But even with that, because you just had this situation come up. Lady, 2015 vehicle. And not only, the thing that hurt me was it was a parent-child. The parent does it, then the child thinks it's okay, and then they're intertwined and locked in each other's business.
So it takes us back to that childhood influence.
Exactly. Bingo. That's my whole point. And not to say that those folks did that with the tax return, but it's just the mindset. Because the point here is we want to shift the mindset.
Yes.
And that wraps us where we are.
So that's talking about, like, how would we help you reframe your mind?
It's that thought process. In the Bible, even God calls for us to have a sound mind. In 2 Timothy 1:7, states that, for God hath not given us the spirit of fear, but of power and of love and of a sound mind. Imagine that. Imagine. And this verse highlights that God provides mental clarity, self-control, and emotional stability rather than anxious, fear, or confusion. Okay? And that's just what it say.
And so following this, in closing, we're going to give you a few tips that you could not wait on that substantial amount of money coming in between January and May.
New life. Right?
Yes.
Springtime.
Now, like there's a few tips that we can give you. For example, throughout the year, you could start paying yourself 10%.
10%.
Pay yourself 10%. Every paycheck, pay yourself. That goes into savings.
Savings, right.
And here's the thing. If you're saving the money and not touching the money, let's just say that you, over 3 months, you save $100. That's $300 that you have there.
That's good, babe.
In case you need it. Like, you can take from what's there. But you cannot take from what's not there.
That's right.
So it won't hurt you.
Nope.
To put money back for yourself. So that's tip number 1. Do you have any other tips?
Let me tell y'all something. If you don't take anything away from this podcast here today, please understand a big refund is not an accomplishment.
No.
It's not an accomplishment. And I want to be the one to tell you that, because when I learned that, I had such a mindset shift.
Look at your specific situation, your specific income, how you make your income, and look at how you're going to be taxed.
That's right.
And plan on that. Not comparing yourself to anybody else, but looking at, why am I getting a bigger refund? Actually, is it more beneficial for me to have my money now, like during the season, where I can save money, paying myself 10%, and then taking that money and investing and earning more? And who cares if I get a tax refund, because I'm earning all year long.
That's beautiful. And that's what is sound, because that's all of this episode wrapped in one statement, for real. We do not advise against the instant gratification, spending, shopping sprees, and you're at the end of the day, October to November, December, robbing Peter to pay Paul.
Yes.
That's not ideal.
No.
That's not ideal. And we are all about living a wiser life.
As we're wrapping this segment up, Chelsea, I wanted to ask you, where can they find us to ask us specific questions to their specific situation?
Life without work is dead, so if you want to put some action behind that, feel free to reach out. We have our email attached. We'll get you set up for a consultation. We'll get you set up for a discovery call to see what those next steps look like for your future.
Yes. And so we just want to say thank you for listening to the Beautiful in Its Time podcast.
If this conversation helped you think differently about money or life decisions, make sure you follow the podcast and share it with somebody who really needs it. We'll see you next time. Tell the people bye.
Bye, guys.